In a world of low interest rates and uncertain market conditions, investors are constantly seeking opportunities to generate attractive income from their portfolios. Enter the realm of high dividend stocks, where the promise of substantial payouts provides a compelling proposition. In this video, we will delve into 12 high dividend stocks that offer investors the potential for generous cash flows and steady returns. Number 12. Avalon Bay Communities. Avalon Bay, which is one of the largest apartment owners in the country, reaps the benefits of receiving consistent rental income to fund its high-yielding payout. This enables the company to maintain its leadership position. A leading-edge financial profile is another strength of the real estate investment trust. The robust financial position of the company enables it to grow its apartment portfolio through the development of new communities as well as the acquisition of existing ones. Avalon Bay has increased its dividend at a pace of 5% per year since the firm's initial public offering in 1994, including an increase of 3.8% at the beginning of 2023. This is despite the fact that the company has not raised its payout on a yearly basis. The expectation is that the REIT will be able to maintain its current dividend level while also raising it over the next few years as a result of the rising demand for flats. Number 11. Brookfield Infrastructure. The infrastructure sectors of utilities, transportation, energy midstream, and data are the primary focuses of the businesses that Brookfield Infrastructure manages and operates as part of its broad portfolio of infrastructure companies. The operations create cash flow that is reasonably stable, which helps maintain the company's expanding dividend. At the beginning of 2023, the infrastructure stock increased its dividend payment for the 14th consecutive year, bringing its total to an all-time high. In the long run, Brookfield anticipates that the organic growth of its existing companies and acquisitions will generate an increase in the company's dividend payment that will range from 5% to 9% each year. Over the long run, the organic growth drivers of the company, which include inflation-linked rate hikes, volume growth as a result of an expanding global economy, and expansion products, should grow the company's funds from operations by 6% to 9% per share. In the meantime, subsequent acquisitions will further bolster its bottom line. In the year 2023, the corporation made two significant acquisitions: a European data center platform and a global container leasing company. Number 10. Brookfield Renewable. It has a number of other subsidiaries, including one called Brookfield Renewable. Both businesses are under the management of Brookfield Corporation. This Brookfield organization concentrates its efforts on the development of renewable energy sources like hydropower, wind, solar, and energy storage facilities. The assets contribute to the maintenance of Brookfield's high-yield dividend by producing a consistent cash flow that is supported by long-term power purchase agreements with utilities and other end users. In addition, throughout the course of the long run, the corporation anticipates a rise in its dividend of between 5% and 9% every year. The company's internal growth drivers, which include an enormous pipeline of new renewable energy projects in addition to additional acquisitions, are what is powering that prediction. Brookfield Renewable has already secured and funded growth in funds from operations per share, which is at least 8% annually through the year 2027. Number 9. Duke Energy. A significant provider of utility services is Duke Energy. The company's natural gas utilities deliver gas to 1.6 million customers throughout 5 states, while its electric utilities provide electricity to 8.2 million customers located in 6 different states. The company's operations bring in relatively consistent cash flows, which are supported by government-regulated rate structures. The expansion of Duke's transformation and distribution network is the focus of a significant new investment initiative that is currently underway at the company. As a result of these expenditures, the company's earnings per share should expand between 5% and 7% per year through 2027. The expansion of the utility's earnings should make it possible for the dividend to continue expanding. Number 8. Crown Castle International. Crown Castle is a real estate investment trust whose primary concentration is the ownership of communications infrastructure in the United States. This infrastructure includes cell towers, tiny cells, and fiber optic networks. Its infrastructure is essential to supporting the next-generation network for the mobile industry, which is known as 5G. Crown Castle views the opportunity to invest in new 5G-related infrastructure as one that spans decades. This should drive a dividend growth rate of between 7% and 8% per year over the long run. Since 2016, it has increased the amount of dividends it pays at a compound annual rate of 9%. Number 7. Chevron. Maintaining and increasing the size of the company's dividend payout is the major oil conglomerate's main financial priority. In 2023, the business announced its 36th straight annual dividend raise, making it one of the oil industry companies with one of the longest runs of uninterrupted dividend increases. Over the past 15 years, Chevron has increased its dividend payment at a compound annual growth rate of 6%. Chevron is in a position to maintain and increase its dividend payments into the foreseeable future as a result of its integrated business operations, low-cost oil business, and low-carbon energy expenditures. Number 6. Enbridge. Over the course of many years, the Canadian oil pipeline firm Enbridge has been an excellent dividend stock. It has increased its dividend distribution every year for the past 28 years, bringing the total number of years it has paid dividends to almost 68. Enbridge is adjusting to the changing landscape by making investments in infrastructure to assist natural gas projects and offshore wind farms. This comes at a time when the global supply of fuel is shifting away from oil and toward cleaner alternatives. Because of the investments, the corporation is now on course to expand its cash flow per share at a rate that is somewhere in the middle of the single digits on an annual basis for the next few years, which should support continuing dividend growth. Number 5. Enterprise Products Partners. In the industry of midstream oil and gas, Enterprise Products Partners is considered to be one of the most important participants. Since its inception, the Master Limited Partnership has maintained a pattern of steadily growing distributions. Even though the company's primary focus is on fossil fuels at the moment, it established a group focused on evolutionary technologies in 2021 in order to investigate potential business prospects related to the energy transition. The anticipated future investments should provide Enterprise with the gasoline necessary to maintain its dividend growth. Number 4. Gilead Sciences. Gilead Sciences has one of the most alluring dividends of any company in the biotechnology industry. Since it first began paying dividends in 2015, the company has maintained an impressive track record, increasing the amount of money it distributes as dividends each year. Its robust HIV property serves as the biotech company's core. However, Gilead has also been successful in making money off of its antiviral therapy, remdesivir, which is one of the few therapies that has been authorized for COVID-19. It is currently developing a number of other potentially successful medications, which ought to fuel the continuing increase in revenues in the years to come. Number 3. Blackstone. Blackstone, a leading alternative asset manager, has a distinctive approach to its dividend policy. Through dividends and the buyback of existing shares, the corporation distributes virtually all of its profits back to its shareholders. As a consequence of this, the amount of the dividend payment that it makes each quarter varies according to how much it has earned. Nevertheless, throughout the course of these many years, Blackstone's earnings have kept pace with a progressively increasing total payment. Number 2. Regions Financial. One of the largest financial institutions in the United States, Regions Financial mostly operates in the Midwest and the South. The practice of distributing dividends to shareholders has a long history at Regions Financial. Despite the fact that the company had to reset its payout level in the midst of the financial crisis that occurred in 2008 and 2009, it has since increased the dividend 20 times over. Number 1. AbbVie. Since its separation from Abbott Labs in 2013, the pharmaceutical company AbbVie has maintained an outstanding track record of dividend payments. Since the company's start until the beginning of 2023, AbbVie has significantly raised the amount of money it pays out. AbbVie has continued the heritage of dividend growth that it inherited from Abbott by increasing the amount of money it distributes to shareholders on an annual basis. Although AbbVie's top-selling medication Humira will lose the patent protection that grants it exclusivity in 2023, the company's more recent products, such as Rinvoq and Skyrizi, should help soften the blow. As a result of this, it is in fantastic form to maintain the current level of dividend income while also increasing it. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.